Hi, ladies and gentlemen. I want to talk to you guys about how the stock market is just about to choose the U.S. president. As you know, ladies and gentlemen, with various data streams over an expanded period of time, variable details exist that can basically be looked at to one degree or another and show a pattern of events that basically prove an outcome to one degree or another. And what I want to show you here is from Bank of America's Merrill Lynch Global Research. And what that actually shows you is how the stock market over the last, better part of 100 years has actually basically chosen the U.S. president, and how that affects how we can use that data in the past to prove the outcome of the U.S. president currently. On the bottom here, it says, note that the 2008 election does not be showed, etc. Due to the financial process, or the financial crisis, I apologize, before the election. It's coming from Bank of America Merrill Lynch Global Research. I apologize, folks. This is the margin of victory for the U.S. presidential elections. And so it shows Obama, it shows Nixon, it shows Bush in 2004, it shows Bush in 2000, it shows Carter, it shows Kennedy. It shows Bush Sr. in 1988, Johnson in 1964, Nixon in 72, Reagan in 1980, Reagan in 1984. And it shows the returns of the S&P 500 in the 90 days before the vote. And if you look, it almost seems as if using the data that in 2000 and in 2012 and 2014, the margin almost seems to grow as the years go by. Well, I'm going to show you what this actually shows, because I think it's actually pretty good in terms of providing the information. Alright, so here it is. The stock market has already picked the U.S. president. The GOP is traditionally known as the party of Wall Street, but this year investors, for the most part, are betting against the Republican standard bearer. The market appears to have decided not only that Hillary Clinton will win, but that it won't even be close. David Wu, a strategist for Bank of America Merrill Lynch, said a report distributed Monday investors like landslide victories. Wu noted that the S&P 500 has risen more than 4% since July 5, which marks the beginning of a 90-day trading day countdown to the election on November 8. During years when presidential candidates won by a margin of more than 80%, the Electoral College votes, the S&P 500 posted the average returns of 8.4% in 90 days leading to the election, as the chart illustrates. Margin of victory of the U.S. president election, percent of Electoral College votes, and return of the S&P 500 in the 90 days leading up to the vote. Hang on. Last time stocks outperformed the current rally of halfway point was when Ronald Reagan won by a landslide against Walter Mondale in 1984. So I'll go back to that to show you. So there it is right there. Reagan is there. Nixon is his complete opposite. There's complete polar there. So it's claiming Hillary's not only going to win, but that she's actually going to win by a landslide, because everybody's basically putting all their money against Trump, supposedly. But we all know that the underdog last, 20 years or so generally wins the election. Obama was seen as an underdog. Bush Jr. was slightly more the underdog. And Hillary, no doubt, will be the underdog in this election, winning the election for 2016, and she will definitely be the next president of the United States. I have absolutely no doubt in that. However, as I've said before, I've seen her get sworn in already in a vision. Whether or not you want to take that as real or not, I don't really care. It's my understanding that, like her husband, she won't actually make it long, and although he served a full first term, I don't see Hillary making it past the first 2 or 3 years of her presidency. I'm not saying that anything bad's going to happen necessarily, but she has so many complicated issues pending against her. Not only her health is dimming, but her investigations and everything else are pretty much just screaming for there to be some kind of cataclysmic event that basically, makes everything fall out from under her. So I'm going to go ahead and show you this a little bit more. The IEM is a future market operated for research purposes only by the University of Iowa Tippie College of Business. Earlier this year, Sam Stovall, U.S. equity strategist for the S&P Global Market Intelligence, noted the S&P 500 has a fairly good record of predicting the election results. Since 1944, the incumbent person or party was re-elected 82% of the time when the S&P 500 rose between July 31 and October 31, according to Stovall. The only exceptions were 1968 and 1980 when there were population third-party candidates in the picture, or popular third-party candidates in the picture. Whenever the S&P 500 fell in price during these months, however, it signaled a replacement of the incumbent 86% of the time. The latest polling numbers show Clinton leading Trump in most of the voter surveys, according to news and data. You get that. Real clear politics. The S&P 500 hit a record high of 2,193.81 on August 15th and is poised to extend its rally to 6 straight months. Dow Jones Industrial Average also flirting with this slight gain, in August, which would be its 7th month rise in a row, according to FactSet. So all this data combined through their own groups in the background and strategies thereof basically show that somehow or another Clinton will be favored because there is no one to re-elect, and since basically Hillary is the Democratic Party nominee, that she will be technically the re-elected president in this rally, which is technically meaning that the Democrat incumbent will be elected. That's what I'm getting from this data. So it seems about right. It seems like if you put enough points on a map, no matter what the data stream says or doesn't show, you can eventually make a good, strong argument for just about any set of data and any findings thereof. So I do believe that Hillary is going to win the U.S. presidential election in 2016. I believe that almost from the absolute beginning. However, I don't see her lasting more than, I would say, better part of the first year or so. I don't see it because all the stuff pending against her. Yes, everybody's saying, as soon as she's in office, she'll write herself a pardon, and that will be that. Well, that's nice, but, you know, that's not what the president can do. And someone said, well, she writes an executive order, she can do it and be done with it, and basically name herself queen, and, you know, that would be that. Well, that's nice and everything, but there's a lot more to it than that as well. So, anyways, the presidential election looks like it's already been decided by the stock market, and it looks like the information is at least somewhat convincible. Thank you guys very much.